Hi everyone, welcome back to our class. In today's class, we solve Summer 2020, Paper 11, question number 16 to 20. If you didn't watch my previous video, please watch it first to get the continuation. So let's start. Question number 16. Shareholders are entitled to a fixed annual dividend with any unpaid dividend being paid out of future profits. What does this statement describe? If any preference shareholders, they get their unpaid portion of dividend in the following year or in the future profit, that is called cumulative preference share. If they are not paid from future profit, that is called non-cumulative preference share. So here it clearly mentioned they get the unpaid dividend out of the future profit. So what is the correct answer? Cumulative preference share. Question number 17. Which statement about bonus issue of ordinary shares are correct? What is bonus issue of ordinary shares? The company issue fully paid up share to the existing ordinary shareholders. That is called bonus share. In the bonus share, company is not receiving any cash from the shareholder. They are adjusting from the shareholders fund. So, what is correct? The first one, it will generate extra funds for the company. It won't generate extra fund because business gives fully paid up share, no money receiving. The company's liquidity is not affected. Yes, that is correct. Company not receiving any cash, so it is not affecting the assets or liquidity of the business. Next, shareholders can sell their bonus share. Yes, ordinary shareholders, they may sell their bonus share. So the correct option 2 and 3. Answer C is the correct. Next. The following information is available for T Limited. Retained earning, they are given opening balance and closing balance. Last year closing and this year. Last year closing is this year opening. So they are given the balance of last year closing and this year closing balances. Retained earning, general reserve, accrued loan interest. During the year ended 30th June 2019, T Limited made the following payment: dividend and loan interest. What was the profit from operation for the year ended 30th June 2019? So our accounting period is end of the year is 30th June 2019. To calculate the profit from operation. To know the profit from operation, we have to add back dividend and loan interest. All the interest, profit before interest and tax is called profit from operation. So we have to add dividend and interest to the retained earning, then we get the profit from operation. So what is the retained earning of this year? This year retained earning is 94,000 and 148,000, that is increased to 148,000. So 148,000 minus 94,000. How much it comes? The difference that is coming 54,000 retained earning we have added this year from our profit. Then general reserve. Before it was 50,000. Now it increased to 65,000. So 15,000 is increased. That also gone from our profit. That is 15,000 is the part of this year profit. We should take it out. Then accrued loan interest was 3000 was it before, now it became 1000. Accrued interest means the interest not paid. Before it was 3000. Now it became 1000. So opening accrued is 3000, closing accrued is 1000. So here loan interest paid 27,000. What is this year loan interest? Opening accrued should be, we should deduct opening accrued. We should add closing accrued. So 27,000 minus 3,000 plus 1,000 is equal to 25,000 is the loan interest. We should be added. Then dividend 60,000. So now all the amount, we got all the amounts. So we can add this all. First one 54,000 plus 15,000 plus 25,000 plus 60,000. What is the total amount? 54,000 plus 15,000 plus 25,000 plus 60,000. Profit from operation is 154,000. So our correct answer is D. Next, question number 19. Which ratio tells managers how long it takes to receive payment? Accounts receivable. Goods sold on credit. Current ratio. Current ratio means the ratio with current assets and liability. Liquid asset test ratio. Trade payables, trade receivables is clearly given. Trade receivables turnover ratio. Correct answer is D. Question number 20. The following information is available for G Limited for the year ended 31st December 2019. Share capital, all the details are given, capital, assets, profit and all. What is the question? Question is, what was the return on capital employed? Return on capital employed is equal to, equation is net profit or profit from operation, net profit or profit from operation divided by capital plus long term liability. Capital plus long term liabilities. Here net profit is equal to profit from operation. What is the profit from operation? Profit from operation $244,000 is the profit from operation. And capital is given. Company share capital means capital plus all the fund. Here capital is equal to 275,000 plus 400,000. So 675,000 is the capital plus long term liability. The question given one long term liability. Long term liability 180,000. So we can apply these amounts into the equation. Profit from operation is equal to 244,000. 244,000 divided by share capital 275,000 plus, what is the amount? 275,000 plus 180,000 plus 400,000. 400,000 multiply 100. What is the answer? Correct answer is 28,054. Hope all are clear with today's class. If you have any doubt in this class, you can ask in the comment box. I'll clear you. Thanks for watching.